Good evening and welcome to a brand new show of Markets Tomorrow.
Hi everyone, let's run you through experts who will be joining in over the next half hour. Kenneth Andrade, CIO IDFC Mutual Fund, will be with us. We'll get in some fundamental opinion from Devin Choksi, Managing Director at KR Choksi Securities, and of course Ashwini Gujral, Fund Manager at ashwinigujral.com. Okay, let's get in our experts and find out their opinion. Devin, what's your call for the October series now?
Yeah, well, Avan, I think the October series appears to be, somewhat more promising, as I would call it. There are a few things, which I would like to take into account and perspective. Of course, the rollovers which have happened, from September to October, they have been quite aggressive. In my study in last few months, I haven't seen, this kind of aggressive rollovers taking place, which suggests that the bulls are definitely determined to go long, for a good period of time, because the kind of spread on which, they have rolled over the position has been, significant across all the stocks. Almost 44 stocks out of 50 stocks have been having a larger amount of spread, for the rollover. That is one technical viewpoint, but at the same time, fundamentally few things, which could possibly propel the market. One of the things would be that RBI, before the policy review itself in October, could possibly roll back the MSF rates, and that could possibly mean that it would give a good amount of breather and a space for some of the banking stocks as the treasury yield starts coming down and the rate of interest also starts coming down, because of the liquidity built into the system. So to a greater extent, I believe that that could propel a kind of an up move in the market. At the same time, few of the policy measures which RBI is expected to announce, and then I would come on it, which would include, the differential rate of interest, for some of the impacted sectors like infrastructure. That could possibly mean that the inflation is taken under control. At the same time, the economy is given the kind of momentum by way of spending into the economy through infrastructure. So these are some of the measures which could possibly, give the market a good amount of stability going forward. And of course, the result season on a selective basis, at least in the first half, things could really look, be more interesting and promising vis-a-vis the second half, as we all expect. So it's going to be at least positive in the first half of the October, I suppose.
Ashwini, this question is coming your way. What is your sense? 5800 on the Nifty is intact. The upside is clearly defined. Do you think somewhere Nifty will now settle into a range?
See, my take on this breakout that happened post the Fed event is that before that we were in a range of 5800 to about 5960. We broke out for exactly 2 days, after which we came back into that range. So really, as far as I am concerned, that breakout from 5960 did not happen. So broadly, for the last 12 days, we have been in a range of 5800 to 5960. Had those two events not been there, we would have had a 12-day of range-bound action. Given the way momentum is collapsing, and at 5,200, I would be positive, anything gets announced, we'll move up. But if people are getting excited at 58 and 5900, you just need, one small piece of bad news to puncture all the enthusiasm. So 5800, as long as that holds on, probably some hopes of positivity can be kept alive. But once 5800 goes, I think we should have a clear run of 300 points downside. I think given the way 6000, 6100 has acted all through this year, it seems unlikely that it will get taken out in a hurry.
Yeah, so Kenneth, just want to add you in on that point. Given that we've come off from those lofty levels of close to 6100 that we started off with, yes, there has been a gain in the month of September, but do you think we have some more headroom to go, or fundamentally you think we've topped out?
I think we're in this range for quite some time now, and I don't see anything happening over the course of this calendar year. I think a lot of events are ahead of us, both international and domestic. But I think the key moot point of the argument out here is corporate profitability is not going to show a dramatic improvement over the next year or two. And if that's going to be the case, it's back to a fairly range-bound market for some time ahead. So you'll be in a trading band. I think it's about creating portfolios at this point in time and not really looking at what we went through between the early part of last decade.
Right, let's look at the stock of the day, and that has to be Sun Pharma, news-driven. Sun Pharma today hit a new all-time high. Ashwini, what is the way forward for Sun Pharma now? The stock is refusing to come down. It is clearly in a bull market, and today it made a new high.
Well, with the perspective that large cap stocks overall are not bullish, and in that sort of a scenario, it becomes difficult for individual stocks to outperform beyond a point. On its own, it has consolidation in this 480, 580 band, and now it appears that having found support at higher levels about 540, 550, chances are the next target on Sun Pharma could be closer to 680, 700. So Sun Pharma overall in terms of the pharma sector looks bullish, but I would be more interested in buying this at about 480. I don't like to buy stocks that are at new highs. While that is bullish, but tactically you should wait for a correction before you get in.
Ashwini, let's talk about BHEL. For those who have missed the bus on this one, how do you approach the stock at levels of 150?
Wait for the next bus. See, you can't get in after a 50% rally. Chances are that maybe 160, 162 is possible. But I would think that this could retest its 200 DMA around 175, 180 if this rally continues. But after a 50% rally, it's probably a bit late in the day to get on to BHEL.
Devin, BHEL a month ago was considered as dead money. What has changed? The fundamental concerns are still there. Margins will not improve. Order book is contracting. What explains the recent spike? It's a spike of over 35% from the recent low.
Yes, I think the fundamentals haven't changed, I think, so far as much as I think one would have imagined it to be. However, the prospects are improving to an extent, I think, particularly for the infrastructure and more so in the power sector space, wherein I think the FSAs are getting through, I think, for most of the power capacities. In such situation, I think the newer order book, I think, is going to get established very soon, sooner than later. At the same time, I think the companies like BHEL, I think, have already executed the projects and they have not been getting commissioned, where the money is stuck. I think that is where I think they have the prospects of getting money back from the system, as far as I think the projects are concerned. So to a greater extent, I think the improvement in the prospects is probably, I think, asking for some amount of re-rating at this point of time. That's the rationale which is available when you talk to the company and the management. The second part of this particular rationale is that going forward, the projects are going to get started with the differential interest rate policy which is being talked about, and the infrastructure-led trust which is coming up, I think, from the government side. It is probably, I think, signaling some amount of optimism at this point of time. So that is where the stock is getting re-rated. Mind well, I think valuation-wise also, I think if you look at it, the company is still quoting in the single-digit PE, even I think today, on a forward earning estimate basis, of course. But the fact is that I think that's where the re-rating has to take place. So these are some of the rationale available. I'm not suggesting that the stock can't correct in this kind of an environment. It could correct, but the downfall which we saw in the earlier period, probably I think that may be the worst of the downfall that one would have seen. In future, I think one would find that it would not probably taste that kind of a fall again.
Kenneth, want to deviate from that and talk about a sector that you've been pretty bullish on, that's the FMCG sector, but now you seem to be fairly underweight on financials with the exception of HDFC Bank. You don't own a single bank, so what's the rationale there?
Well, step into the last quarter and we did delve into a couple of cyclicals out there, more specifically public sector banks. But as the incremental environment unfolds itself, it's going to be a challenge for the financials. Financials have historically always been late cycle plays in an environment, so they tend to do well when the economy is doing extremely well. And they're probably the last. They're the last part of the market that actually does extremely. Or last part of industry that does extremely well because of a good environment. So I think that's where the call has been. So what we tried to anticipate was a bottoming of the entire economy, which doesn't seem to be the case as it is. A lot of policy framework has to fall into place, and a lot of restructuring as far as the debt of corporate debt has to take place. And it's going to be some time before we hear reasonably good news from that part of the entire environment. So going back to how we orient our portfolios, what we try to do is we try to buy companies which have a reasonably sound balance sheet and do not take too much of solvency risk. Now when you try to do that in an environment like this, the next question is what price are you willing to pay for it all? So that's the trade-off that you have. So we're buying reasonably solvent companies who've got extremely robust balance sheets at the end, and there's a price to play for all of it. So that's how we're putting it together. We had historically liked the consumer part of the economy. We tried to pick into an economy which was we anticipated would bottom out sometime in year 2013-14. But that trade has unwound itself. So the portfolio has gone back to where our thought process has gone back to owning companies we think will survive this entire cycle.
Well, tomorrow is going to be the first day of the new series. What are the stocks that you should be monitoring? Pranay Jain is here with the details. Pranay.
Well, the first one is a midcap.com company, that is InfoEdge, which largely has online portals in three key businesses, that is in jobs, in real estate, as well as matrimonials. And we are picking up a buzz that the company is looking to sell and exit its business in the marriage portal. Also, job site, that is Naukri.com, is its largest revenue driver. And though the job sentiment has remained muted, there is room for upside over here. And with the uptick in IT business, that one contributes more than 50% to its overall revenue. So that is a positive. Also, it's seen market share gains in its real estate business, which is lifting its ad revenues, which had otherwise been soft. So that could be a surprise. So dealers are recommending a buy on positional basis. Next one is RIL, and the company continues to remain entangled with the oil ministry, where it may be looking to set up now an independent consultant. But even as the gas pricing issue comes on track, there are still other regulatory irritants which keep the sentiment dull on the stock. Also, the shale gas policy clearly favors the PSUs, and when the company has invested 6 billion in this business, that is not a positive. Also, the export parity pricing is a mild negative for the company, though not as much as earlier feared. So overall, dealers are recommending a sell over here due to the negative sentiment, and they can see it dipping to levels of about 800 soon.
Right, Pranay, thanks a lot for that. Ashwini, what are your top ideas for tomorrow morning?
Well, Exide is a buy with a stop of 129, target of 138. Idea is a buy with a stop of 169, target of 180. And JSPL is a sell with a stop of 245, target of 230.
Devin, before we let you go, is there one stock idea that you have as a long-term theme, and also wanted your opinion on the whole Tata Motors versus Tata Motors DVR?
Well, I think we'll take up this particular Tata Motor itself, I think, for long-term investment idea. Certainly very convinced about, I think, this company's growth story. JLR portfolio certainly, I think, is more encouraging now than before at the same time because of the new models launches. And that could propel, I think, higher amount of growth. But more importantly, I think the preference going towards giving the auto loans at a consistent rate going forward, and after the good monsoon, I think the definite pickup in the farm segment as well as in the utility vehicle segment, where Tata Motors favorably placed, particularly in the utility vehicle segment in the rural sector. I think the company should be favorably be placed, I think, in the domestic market as well. Along with the industrial segment, in which the mining activity getting started post monsoon, I think should increase the demand for the HCVs and the LCVs ultimately. So that is again, I think, sounding good. So second half of the financial year should be available to the Tata Motors as far as, I think, the domestic market is concerned. And along with JLR portfolio, company should be, I think, favorably placed as far as investment is concerned. Vis-a-vis DVR, I think one would say that yes, I think for those investors who do not mind compromising their voting rights, I think they may consider buying DVR at a discount, because when the company starts assuming the bull trend, the uptrend, in such situation, I think buying DVR would be much better, because I think the discount would get breached faster than otherwise. So I think those who mind, I think their voting right be compromised, they could consider DVR. Otherwise, I think the mainline stock itself is offering good opportunity, given the fact that it is available in a single digit PE even today.
All right, gentlemen, really appreciate your time and thank you for joining us on this edition of Markets Tomorrow. That's it on the show. Thank you for watching Markets Tomorrow and have a great evening.